interviewing Will Adams of Fastmarkets. He is Fastmarkets' lithium analyst, and he just recently wrote a note why there's still time to avoid the lithium supply crunch. A lot of worriers out there, including ourselves, are that we are in a shortage of lithium, and lithium prices are rising aggressively, and we think they have a bit more to rise. And we're going to have a bit of a conversation and debate with Rodney on that. But just want to flag here, Fastmarkets re-engaging with their flagship lithium supply and markets conference in Las Vegas, September 20th and 22nd. Very much looking forward to attending that. So Will is in this note basically showing lithium process supply by 2025 can grow to 1.03 million tons. And there's a lot of forecasts out there. Albemarle is at 1.14 in 2025. Who knows what the future will bring, but his arguments are basically 7. That the production issues abate, high prices will relieve, COVID restrictions will lead to, ramp ups in supply, brine capacity from Albemarle, SQM, and 300,000 tons of additional capacity he forecasts could come online by 2025. Care and maintenance mines like Wodgina and Alita and Altura will come back online. New suppliers in Australia will come. Then localized supply in the US, Canada, Germany will also come on. And he's also bullish that DLE will add later, 7 to 10 years out, recycling. I'm going to just let Will basically just describe, his article, current views. You were right. A few years ago, we interviewed you on a podcast and you were rightly bearish. We were a bit more bullish, but was there an oversupply? Was there an under demand? No one could have forecasted COVID, the Trump trade war, and other factors. But bottom line, you were relatively bearish that an oversupply could continue for longer, and you were right. The market's now tight. How do you see it unfolding? In the next number of months and years?
The turning point happened in the second half of last year. Prices have been falling from 2018 to 2020, and as a result of that, when you're in a falling market, the supply chain tends, or certainly the lower parts of the supply chain, tends to destock, and that's what the situation was. I think the EV situation, because of COVID and because of government's response to COVID, set a situation where you saw EV demand hold up much stronger than expected. And certainly we saw a rebound in China in the second half of last year, and you saw really aggressive growth in Europe, which I think totally took the market by surprise. So you had a situation where prices had become unsustainably low, the market had been in surplus, and I think the combination of seeing those low prices and realizing that they were unsustainable led to some consumers starting to restock. And then so I think what you saw was a combination of some restocking going on plus strong demand, and then sort of the available material that people thought was there suddenly wasn't that available as people restocked. And that's why prices started to move higher. And then once you saw that price rebound started off in China in the lithium carbonate market, the spot market, others then started to join in. You quickly switched from a sort of a destocking market into a restocking market plus strong growth, and that's led to sort of the very strong first 4 months of the year. And then in China, we've seen some sort of settling down in lithium carbonate price recently. We're still seeing very strong prices in lithium hydroxide prices in China. And I think one of the reasons for that is a lot of the tier 1 quality hydroxide in China tends to be sold under long-term contracts and exported. And therefore, some of the consumers of hydroxide in China who tended to sort of survive in the spot market more have suddenly found that the supply has been tight, and hence prices have really put in very strong performances year to date.
What I'm seeing a lot of is a very high level of cathode production. Some of the logistics are strained under COVID. There is some differential between batteries installed, battery demand, and then cathode production. But in the end, if it's going in a cathode, it's demand. It's got to come from somewhere. There's nothing new coming online. What's your prognosis, going forward for hydroxide? My understanding is there's very little in inventories available, so the only way really is up.
Yeah, so if you're talking sort of the second half of this year, yeah, I think the market is going to be tight. I think you will start to see some of the idle capacity coming on later on and towards the end of the year, and then that will ramp up over next year. Obviously, you've got SQM increasing production towards the end of the year, and sort of quite a significant increase will ramp up next year. And you're also seeing sort of other Albemarle as well, sort of increasing capacity. So I think there is supply on the way, and I think these markets, although it is tight now, I think what we have seen is a certain amount of, as I said earlier, sort of restocking, and maybe having restocked, people are in a little bit better position to not chase the prices higher at the moment. And I think that's what we're seeing at the moment. Some having restocked, people are being able to sort of survive on their stocks for a while. But that can only last, you can only destock for so long. And then, yes, I think people will, people will have to come back to the market, and we will see prices move up later on in the year. So, I think this year has tight. I think we've been surprised how long it has taken for some of the idle capacity to come on stream, and we understand why that is now. And that's whereas we probably expected more supply to come on in the second half of the year. We're not going to see that until really starting to ramp up probably early next year. So yeah, I think we will, although prices have stabilized for now, I think we will start to see prices increase again towards in the second half of the year. So from now on, really. I mean, last year we saw more hydroxide capacity come on stream in China. That hasn't necessarily ramped up to full speed yet. I think the market's going to be tight, but I don't think we're going to see. I think it's manageable, but it will be tight, and the higher prices will obviously all help longer term, sort of to encourage more investment into sort of production as well. But that will obviously take time to sort of feed through.
And Will, what we're seeing is, particularly in China, is you getting two choices really. It's coming down to LFP and high nickel. How do you see that the whole LFP high nickel playing out?
End of last year, people will thought, well, maybe the NCM is going to grow at a slower pace because there's been this sort of resurgence in LFP. I think we're seeing both sort of chemistries grow. I think we're going to continue to see that. Tesla talking about maybe using LFP in some of its standard range batteries or vehicles outside of China as well. You've seen VW say the same in its entry-level vehicles. And most people I speak to don't know what they've got. An electric vehicle, and they're really pleased and proud about that, but they don't know what the battery is. But as people get used to electric vehicles, they want the higher performance. Then I think it won't be the car manufacturers saying we're going to build these with LFP. It will be more the consumer demanding, actually, I want a high performance car, and therefore NMC and things like that will gather momentum. Not to say that there won't be room for LFP, and I think there is room for LFP, especially in your sort of city cars and the cars that don't need that sort of long range or high performance. So again, I think there's room for both chemistries, but I think at the moment, whereas OEMs are probably setting the scene on what battery goes into a car, I think in time it will be the consumer's choice.
Ultimately, the OEMs and the cell manufacturers are going to need to play a bit of Tetris with what's available and what's not. So I think there's a use case. We just, it's interesting. Albemarle had a very strong case for saying hydroxide to be 60% of the market by 2025. So I think that most likely is predicated on a very strong US market, I guess with subsidies. So that's fair enough. It will depend on EV cells, but just on that front and materials, will I see recently there's going to be a physically settled carbonate contract in China. We know obviously you guys are involved in the LME, and then there's the CME. A physically settled contract, that's an interesting one. Your thoughts? Clearly they're very clear as to who is qualified to put their material up on that exchange. Is this something that could take, or is long-term contracts going to be the order of the day outside China?
In China, it might well work if it's a bigger spot market at the moment, and therefore there's probably more turnover, and therefore material might sort of not stay in warehouse for that length of time. But I think for the LME and the CME markets, I think what was trying to do there is to provide the sort of the liquidity for the risk management, and that can be done without it being a terminal market.
You said a lot of the hydroxide is being delivered into long-term contracts in China. The price, whether or not lithium is a commodity or a specialty chemical, the price volatility demonstrates it looks like a commodity, right? Commodities go up and down, up and down, up and down. So if you're an auto OEM, battery company now, massive plans, and obviously a year ago you were trying to negotiate long-term contracts at very low prices. Prices are rising. What do you think if you were LG, SK, GM, Tesla, and you say, these are my hydroxide needs in 2023, 4, 5, 6, 7. I believe you could supply into that as either a junior or a senior producer. What do you think the right number, is for battery quality hydroxide outside China, firstly, and what do you think the differential is between that price and maybe a carbonate price in China?
Right. I think hydroxide will generally trade at a premium, and we're looking. So if we're looking on a CIF basis, so CIF China, Japan, Korea, then we're looking at $1, $1.50, I think, per kilogram sort of difference. I think that will be it'll be within that range. We are going to see price volatility. I don't think it's a one-way market. I don't think it's just a bull market. I think one of the important things is, as supply comes on, as we saw in 2018 and 19, there are a lot of projects out there. It's the timing of those projects. They're bound to sort of bunch. Some of them are bound to bunch together and come at the market at the same time, and therefore we could see short-term oversupply, and therefore that could sort of hit prices. So that's going to affect both the carbonate and the hydroxide price and the differentials we've seen between them. Last year was a classic example, where traditionally carbonate is at a discount to hydroxide, but we saw, certainly in the Chinese market, we saw that that swing around quite significantly the other way. It has now reversed though, and it's moving higher again. So I think they're both going to be sort of moving around.
If you're SK Innovation, LG, and you are approaching a junior supplier, right, or a senior supplier that's saying, I'm happy to sell you my battery quality hydroxide in 2023, 24, 25, 26. What do you think that is a fair price? Yeah, let's say it's fixed price.
I think the incentive price sort of we work on is around between sort of 12 and 13.
You say incentive price is 12 or 13. Are you thinking incentive price to produce carbonate or to produce hydroxide?
Right. I think certainly carbonate, basically. Yeah. So probably we'd be looking at $1 or so higher for hydroxide.
Okay, only $1 higher.
I think over the long term that will be right, because if you're a lot of the new supplies going to be coming from spodumene, and the spodumene you can either make carbonate or you can make hydroxide. It's and the brine producers are okay, it costs more to make hydroxide, but they tend to have much lower costs of production anyway, or for their carbonate.
Do you think that localized supply or carbon tax advantaged locations will get even a higher premium than the $1,000, which might just be a pure production cost differential?
I think yes. I think localization. I think people will be prepared to pay a premium for localization, and that was probably that will manifest itself. I think in that those projects which provide, whether they're in Europe or in North America, they will probably get financing, be able to pick up financing more easily because they have the advantage of eventually then providing local supply, which I think will be all important. And I think we've seen that because of COVID and the disruptions, but I think also resource nationalism, and the not relying on Asia so much, especially sort of in Europe, where you've got long supply chains. But we also saw the sort of the US-China trade wars a few years back, and I don't think a massive auto industry, where all its they without the batteries and without the battery raw materials, the whole thing could stop. So I think it's going to be an extremely important part of the decision making, and I think you're going to see more and more deals where the juniors or the upcoming producers that can provide local supply will sort of jump the queue, if anything.
Okay, so if I do the math, then if 12 to 13,000 is your China carbonate incentive price, if your hydroxide in China is like 1,000 higher than that, so 13, 14,000. If you're a European buyer or an American buyer from a North American or European project, and you're going to pay a premium on top of that, then the price in Europe and the US for localized supply, not to put words in your mouth, it sounds like could be 14, 15, 16,000 for hydroxide.
Certainly some of the Chinese prices, as we saw last year, their cost of production can be significantly lower, and the price really fell down because they were still producing and continuing to produce. So the cost curve changes, as we all know. Some producers are right down low on that cost curve, some are on the high side. I think you're going to need, in order to get, if we go back to the very early part of the what we're talking about, in order to get the sort of the amount of material out of the ground in a timely manner, we don't want the decision of whether to bring this mine on or not is the price at the right level. It's got to, I don't think we have the luxury for that. I think the producers, the regulators and the financiers are going to have to all really push and run very fast if they are to secure enough supply. So I think the price will be high enough to incentivize the supply chain, and I think we're seeing that now.
Well, the problem with the finance is that if the price is going up and down, a lender, a traditional lender, right, is not going to lend into that volatility. That's why you need the fixed price with a credible counterparty, right? Or you need the government to kind of step in with some sort of loan guarantee, or you're just assuming, or you sound like you're assuming that like America and Europe understand the urgency and that the financing will be there for those types of projects, but it hasn't been the case. The reality is that things like Nemaska and others that are in good jurisdictions have been forced to take extremely expensive debt, and their projects have collapsed, under their capital structures. So that's why I'm pushing so hard on the question of, if you have a credible counterparty like LG, SK, Tesla, GM, right, that is basically, that's going to a junior and saying, I understand I need this supply. I do want it to be localized. I understand the general economics of things, and that I'm willing to pay a premium, for this localized supply. The question is, in GM, SK's mind, they're seeing the price volatility and they think, well, maybe that price is 10, when I think the price is 15, 16. Yeah. And that's why I'm trying to you as a market analyst and are listened to, by these auto OEMs, right? You say I look at it differently, but I think we need the supply to come on stream. There's a lot of misinformation and disinformation. You have Morgan Stanley on the one hand, telling, which is widely read by the world, right? And they're saying, don't worry, the price is good at 7,000, 8,000, that's no problem, right? And then you have other people like Macquarie that says, $3,000, $4,000, kind of premium for hydroxide versus carbonate, and the price needs to be kind of 16,000, right? For hydroxide. So that's why I'm trying, you as an advisor, and Fastmarkets does advise, auto OEMs and the like. So if they're listening to you, that's what I want them. I believe that that's what is necessary. Otherwise, what you say, the supply crunch is avoidable if there's investment now, right? So it is crunch time, right? You know, they need to write the checks. Like GM wrote like an R&D check into Control Thermal. That's not a real check to, you know, for a shovel-ready project that is, you know, going to come to market. You know, SK Innovation has big plans, you know, in America. LG does, right? How are they going? And SK Innovation, I have no idea where their supply is going to come from. I haven't seen them announce any deal.
And I think it's interesting. And I'd just like to sort of look at a situation that we saw in nickel sometime 3 or 4 years ago, when nickel prices were around $13,000 a ton, and to build a new HPAL plant to make the nickel, the sort of class 1 nickel that could be made into nickel sulfate, people were expecting, you know, you'd probably need at least an $18,000 ton. And, you know, the Chinese came in and they started building with the Indonesians those HPAL plants. And so they used a different model from, I think, sort of Western companies, investment companies. They use sort of the idea that, hey, we're going to need this nickel and we're going to need it in 5 years' time. So even if the price is $13,000 now, you know, let's build it. And by the time it comes along, it will be 18,000. And, you know, we are over 18,000 now, just as the first sort of the new HPAL plant is being commissioned. So maybe companies just need to, you know, realize that, and maybe they do need government support on that side in the West to say, look, we need this raw material, and I don't know how they go about it. And, you know, this we need to invest in these operations, and maybe LG Chem or whoever, they also need to make those decisions. Ganfeng are making them. You can see them left, right, and center sort of doing offtake agreements. And so, you know, the Chinese have got that idea, and maybe that's why, you know, they are as strong as they are, and they, you know, they will continue to be that if the other parts of the world don't sort of catch up and use a different sort of business model to invest in the new production lines. And I think we're all agreed, you know, the whole electrification and the lithium-ion batteries, we've all been talking about EVs and everything. We've got energy storage systems as well. There's not going to be any shortage of demand over, and we're not just talking to 2025. We're talking decades of growth we're going to see. So, yeah, I think, you know, I think if people have the confidence in the outlook, and I think we're all agreed, we're not going to probably go back on lithium-ion batteries, especially for lithium. It could be different if you're looking at cobalt because of the changing chemistries, and perhaps even nickel if you're looking at different chemistries. But for lithium, it's the common denominator of all the lithium-ion batteries, and therefore I think, you know, there is little risk of lithium demand, you know, falling short of expectations. If anything, it's only going to get stronger at a faster pace.
Thank you very much, Rodney and Will Adams, for joining us. And a reminder, anyone who's interested to, you know, dig up their research, their weekly kind of battery, you know, prices for lithium, you know, cobalt, nickel are widely read. You know, their herds, I think, are fantastic because they give you an insight into what the players and traders on the ground are, you know, are saying. So thanks a lot, Will. We'll speak soon.
My pleasure. Thank you very much.